Exclusions are the part of insurance that tell you where the promise stops. The process works because a policy may cover a category of loss but still remove specific causes, places, behaviors, or items. You can see it when a home policy covering water damage but excluding gradual leakage. This matters because coverage is defined as much by what is left out as what is included. An exclusion is not fine print decoration. The hidden lever is that it is a contract boundary that can decide the entire claim. For example, a travel injury from an excluded adventure activity being denied despite real medical bills. So the useful takeaway is that real loss does not guarantee covered loss. Policies use exclusions to control predictable or unpriced risk. The moving part is this: insurers cannot charge a normal premium if they must cover every possible event. A simple example is wear and tear being excluded because maintenance is expected, not accidental. The result is that insurance is built for specified risks, not all deterioration. Some exclusions deal with behavior. What changes the outcome is that illegal acts, intentional damage, reckless use, or failure to protect property may block coverage. A realistic case is a claim for a deliberately damaged phone failing because the loss was not accidental. That is why how the loss happened matters. Other exclusions deal with causes. In real life, flood, earthquake, war, cyberattack, mold, pests, or mechanical breakdown may require separate coverage. One ordinary version is a homeowner discovering flood damage needs a separate flood policy. The practical lesson is that named causes must match the policy design. Health and travel policies often exclude pre-existing conditions. Under the surface, the insurer may limit conditions that existed before the policy began unless disclosed or specially covered. Think of a traveler claiming for a known heart condition that the policy excluded. The viewer should remember that medical history can change claim eligibility. Auto policies can exclude certain drivers or uses. The practical engine is simple: commercial delivery, racing, unlicensed drivers, or unauthorized users may fall outside personal coverage. Picture a personal car used for paid deliveries having a claim questioned. Once you see that, use of the vehicle matters as much as ownership. Business policies contain industry-specific exclusions. Mechanically, professional errors, employee injuries, cyber losses, product liability, and property damage may need separate policies. This shows up when a consultant assuming general liability covers bad advice when professional indemnity is needed. That small detail changes the decision because business risk must be matched carefully. Exclusions often have exceptions. The process works because a policy may exclude one thing but restore limited coverage under certain conditions. You can see it when water damage excluded for seepage but covered for sudden pipe burst. This matters because reading only the heading can mislead. The declarations page is not enough. The hidden lever is that it summarizes coverage but rarely explains every exclusion. For example, a customer seeing property coverage listed and missing the flood exclusion deeper in the wording. So the useful takeaway is that the full policy wording matters. Exclusions affect pricing. The moving part is this: removing expensive risks can make coverage affordable for more people. A simple example is a basic travel policy costing less because extreme sports are excluded. The result is that lower premium may mean narrower protection. Claim denials often trace back to exclusions. What changes the outcome is that the insurer may agree damage happened but say the cause is outside the contract. A realistic case is mold after long-term moisture being denied while sudden accidental water damage would be treated differently. That is why the dispute is often about cause, not whether damage exists. Documentation helps when exclusions are debated. In real life, photos, maintenance records, repair reports, and timelines can show whether damage was sudden or gradual. One ordinary version is a plumber report showing a pipe burst suddenly rather than leaked for months. The practical lesson is that evidence can move a claim across a coverage boundary. Agents may summarize, but wording controls. Under the surface, a quick verbal answer cannot replace written terms, endorsements, and exclusions. Think of a buyer relying on a sales call and later finding the policy excluded the exact risk. The viewer should remember that get important promises in writing. Exclusions should guide additional coverage. The practical engine is simple. If the excluded risk is important, ask about endorsements, riders, or separate policies. Picture adding flood coverage for a home near a drainage-prone area. Once you see that, the gap may be fixable before the loss. The practical reading method is to start with your biggest fear. Mechanically, ask whether that exact event is covered, excluded, limited, or conditional. This shows up when testing a policy with theft, fire, flood, illness, liability, or cancellation scenarios. That small detail changes the decision because scenario reading beats passive reading. Exclusions can be reasonable or dangerous depending on your situation. The process works because an excluded risk that barely applies may not matter, while one central to your life can make the policy weak. You can see it when a cyclist ignoring bicycle theft exclusions and later losing an expensive bike. This matters because relevance matters more than length. Exclusions mean insurance is precise. The hidden lever is that the policy does not promise comfort, it promises payment only for defined events after defined conditions. For example, the smartest buyer looks at exclusions before celebrating the premium. So the useful takeaway is that knowing what is not covered is part of buying coverage. Exclusions are the part of the policy that tells you where the promise stops. A homeowner may see water damage and assume it is covered. But if the damage came from slow leakage over months, the policy may exclude gradual seepage. The loss is real, the repair bill is real, and the denial can still be valid under the wording. This is why exclusions often matter more than the broad coverage title. A euro property insurance. A euro sounds wide, but it may exclude wear and tear, intentional damage, certain natural disasters, business use, illegal activity, or damage from poor maintenance. The coverage section opens the door. The exclusion section tells you which rooms are locked. A good habit is to read exclusions through real scenarios. Ask, a euro what if rain enters through an old roof? A euro what if a rented car is damaged? A euro what if a phone is stolen from an unlocked bag? A euro. These practical questions reveal gaps faster than reading the policy like a legal wall of text. Exclusions do not mean insurance is useless. They mean insurance is specific. The safest approach is to understand both sides of the contract, what is covered and what is carved out. When you know the exclusions early, you can buy extra coverage, change behavior, keep better records, or avoid assuming protection that the policy never promised. Before buying or renewing a policy, make one simple list: the losses you are most worried about. Then check whether each one is covered, excluded, or only covered with conditions. This turns exclusions from a scary legal section into a practical filter. If the biggest risk in your life sits inside an exclusion, you need a different policy, an add-on, or a different plan.